Well, Seplat is a Nigerian-based energy and power company, and it listed fairly recently here in the UK. In fact, it turned out to be the biggest IPO from Africa ever. And we're joined now by the chairman and founder, Dr. ABC Orjiako. So, how's it been going since the float?
Thank you, Nigel. As you rightly said, it was the biggest oil and gas IPO in Nigeria and in London by any African company. And we're happy to have pioneered that. For us as a company, that IPO brought in a lot of things. It brought us to global visibility. It therefore means that our eyes were very strong on good corporate governance and best practices, strong management team, verifiable track records, and all the things that the investors needed to be able to have the confidence to invest. Another very important thing for us, of course, the promises we made. We promised that we'll keep our eyes on the fundamentals for our growth, which is three-plank, our acquisition of new assets, organic growth of our existing assets, increasing the production, increasing the reserves, and looking at exploration all in one. The next, of course, is our gas development, which is quite important. All of this ensures that we have robust balance sheets, good cash flows, very cash generative company, and dividend paying. So we promise the investors that they will be having not only capital gains, but as well as pay them dividend.
Well, that's great though, isn't it? Because that's all the things that you'd want, a bit of a checklist for a company that you're going to invest in during due diligence. But ultimately, it comes down to how you achieve that and whether it's possible. Because in a sense, you seem to be doing quite a clever trick. And I'm not suggesting it's a trick, but it's a good thing. In a world where the price of oil is going down, you're actually growing and making an increasing profit. So how do you do that?
How we do that, we keep our eyes on cost. First of all, our choice of acquisition, we don't overpay. We say that acquisitions we do are very price disciplined. We keep our eyes on oil prices, knowing that oil price goes up and down. Therefore, we pitch our operations and profitability at making sure that our operations are very cost controlled, cost disciplined. And in doing that, we therefore made sure that our break-even point for our production is way below where the oil prices are going.
So where is your break-even?
Our break-even point today can go as low as $30 a barrel. So we still have quite a lot of headrooms to do that.
Now
that's profitable.
That really is challenging. I'm just
one of the areas where we are always having issues is third-party related. When we have to put our crude through third-party pipelines and the theft issues and all of that, and the discounts as a result of that, these are the things that impact our OPEX. Other than that, from our in-house operations, we still can break even at $30 per barrel.
Yeah. Now that is the kind of thing that I think many big, well-established companies would be thinking, gosh, I wish I could do that, be profitable at $30 a barrel. So how are you actually doing that? What is it in terms of technology? What is it in terms of the way that you work that makes that difference?
Well, definitely, if you know the Niger Delta, you find that the OPEX levels in Niger Delta, but for the real problems of disruption and theft, you can have OPEX in onshore being the level of $10 a barrel, frankly. But with all of the issues you have to deal with, oil theft corrections, and of course for a company that's in a growth phase, you have quite a lot of aggressive investments. That tends to bring our operation and even break-even levels in the 30s. But then what that means for us as a company is when the oil price is falling, we still remain profitable, but that doesn't mean that overall revenue will continue to be as high as we expected. But again, one of the strong mitigants we have is our gas development. In gas, we saw it well ahead of time. Given the gas revolution programs in Nigeria, we immediately made a clear decision that we would develop gas to support the reform agenda in the administration, gas to power, gas to industry, and gas to agriculture. When you do this, you find that with the increasing demand for gas in Nigeria, with the review of domestic gas prices in Nigeria, we're beginning to see demands and at prices as high as $3 per million SCF. Compared to Henry Hub's price, you find there is no incentive to export gas, so the real domestic market is growing. So from a company standpoint, we decided that we'll make gas a major contributor to our bottom line. So in terms of aggregate profit, the oil remains profitable. Even if the revenue falls, we compensate with our gas developments. That's the way we've done it.
So that focus on gas, I mean, you're talking about tripling natural gas production by 2020. Have you got the funding in place to be able to invest to do that?
Well, we're investing very aggressively in that. As you probably know, Nigeria is indeed an oil and gas company, but more so gas reserve is huge. At 183 trillion cubic feet of gas reserves of discovered, and most of these were done while searching for oil. So it means that if you really do pure gas exploration, you probably have 2 times that value. And we're going to take the advantage of that to explore for more gas, produce what we already have, and tap into the opportunities that has been created in the gas revenue. Now, for Nigeria as a company, it is very achievable to double the gas reserve and gas production by that time. And if you look at the installed capacity for power in Nigeria, at 6,000 megawatts capacity, and out of that, only about 80% is indeed being supplied by gas and producing. You now see that there's quite a lot of headroom to develop gas infrastructure. Over and above that, Nigeria plans to take this 6,000 installed capacity to 40,000 by 2020. That by itself would take the current gas demand in the country from about 1 BCF to as high as 10 BCF. Again, that is headroom for investment, and we're definitely seizing this opportunity to tap into it and grow our gas business.
All right, so briefly, where next for the company?
Next for the company, as a listed company, we keep our eyes on all of our promises, keep our eyes on our profitability, keep our eyes on increasing production, keep our eyes on increasing reserves through acquisition and organic growth. We make sure that we make our investors happy. We continue to pay dividend. We maintain that we'll continue to give them increased capital growth. In terms of our stakeholders, we continue to make them happy. Our community engagement is uppermost in our minds. Protection of environment, investment in gas, and making sure that this company stays here for the long term.
All right, Dr. ABC Orjiako, thank you very much indeed for joining us, the chairman of Seplat.
Thank you very much. Thank you, Nigel.